Good afternoon. Today is Monday, the 7th day of July, 2011. This is Brian Shannon from Alpha Trends. We're going to go ahead and take a look at these markets. And as always, on Monday nights, this is brought to you by Realtik. Go to www.realtik.com. It's a analysis and trading platform, and that's what you see here on these charts is the Realtik platform. So let's take a look at this S&P 500. We pulled back. I was saying on Friday that I thought that this week we would maybe drift down towards the 132 level where we had this 50-day moving average as well as the 38.2% retracement of the recent move off of the lows near about 126 and a quarter up to the 135.70. So we were looking at this. Here we go. Here's the move and 38.2% retracement. Well, that 132 level is approximately right equal to that 50-day moving average as well. And the exact number for the 50-day moving average is simply moving average is 131.84. So today's low was 131.66. We undercut that 50-day moving average a bit. And as I said, I started out, I was thinking that we would drift down towards the 50-day moving average. Well, obviously that's not what happened. We had a gap lower and just continued sell-off throughout the day. We had a little slight bump there at the end, but nothing worth measuring really, and still stuck below that volume weighted average price. It's going to be important to see the market, I think, hold in around this area, maybe down towards about 131 and a quarter or so. We could also maybe see a little bit further pullback when we look at that Fibonacci. I think 131 to 131 and a quarter, and below that obviously is this bigger level of 130 where this breakout began. So I think we need to see this market settle in just a little bit. It's good to see a pullback. It was discouraging to see it come in the form of two gaps lower, that is Friday and then again today, but we are at an important level that we'll see if it can stick in here. The NASDAQ for its part was down $1.87 on the NQ or the Qs rather. Exact percentage change as the SPY 1.81%, which is kind of unusual to see, but we have the resistance up here at 60 bucks, 59 and a half rather, and we're pulling back, and right now it really doesn't look like a bad pullback at all. When you take a look at that Fibonacci on here, what we see is, based off this bigger move, we haven't even pulled back a third of it yet. So 1/3 retracement would get us down to about 57 and a quarter, and that's 57 and a quarter, I think, is the bigger, more important level. So let's see if that still settles in towards that level this week. And this Fibonacci tool, by the way, is just one of these trend lines here where I can pretty simply go in, for something like the SMH and take, this move, for instance, that I just drew a regular trend line on, go in and put this Fibonacci on, and we came down right to about where we were thinking we might get some support, is that 34 level. That's where we also see right now that 10-day moving average. So the market is pretty volatile in here. You take a look at the moves in these financials. Again, this is why we don't trust rallies with a declining 50-day moving average. They typically are going to fail, and here we've had two sharp gaps lower and continued sell-off. So the financials are down to really an area where we would like to see them hold or get a little bit of a bounce, but it's really difficult to still trust this market in either direction for more than it seems a couple days. So discipline always is discipline and money management are always the two skills that are going to reward you most in a volatile environment like this.